good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we are continuing to work with the scalping algorithm which we are developing using the RSI. And here is this synopsis of the functionality of the RSI. I hope you are well familiar with the RSI's technicality by now. And then the Williams percentage R is also going to be used. With ATR, we basically use ATR for defining the entry and the exit points. Here is the standard disclaimer. I would like to remind you that this is simply a tutorial session to help you build an efficient algorithm for trading in the financial markets, and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs and also allow it to run on the demo account for sufficient enough time to get a clear-cut idea of the efficiency of the algorithm developed. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we start for the day. I would like to briefly give you an idea of what we have done so far. We have developed the initial building blocks for our algorithm, and before we proceed further, here is the brief synopsis of the idea behind the algorithm which we are building. Basically, we are looking at the RSI values, whether the RSI values are falling or rising, and for that we are going to compare the RSI value of last candle closed on the 4-hourly charts using the shift 1 to a day back using the shift 6. So we will be comparing, and if the values are falling, then we are going to look for a sell trade. But apart from that, we also need the the last candle closing RSI value to be below 50 for a sell trade, and it should be above 50 for a buy trade. So here, though as you can see that RSI values are falling, but we are not going to go into a sell trade only when it falls below 50. So somewhere like here, then if now we look back and we have these prior values higher than the current value, and then the RSI value has also fallen below 50. So now it might look for a sell trade provided the other conditions are fulfilled. And for rising RSI values, we again compare the same, and we also need the value to be higher than the prior values, and also it should be higher than 50. So we are using 50 as our marker. If the RSI value is below 50, then we'll go for a sell trade. If the RSI value is above 50 and rising, we go for a buy trade. And then we focus our attention on the hourly chart for pinpointing the entry and the exit point. So what we do, we look for the Williams R values. We have defined that Williams R's value of the 3 hours back candle should be below minus 80 for a buy trade, and for a sell trade it should be above minus 20. And then whenever there is some buying momentum for a buy trade, let's take an example of the buy trade. Whenever the momentum comes and little bit of buying comes on the lower side, and the Williams R value has been in the oversold territory for at least 3 hours, then only we look for a buy trade. So suppose if the condition is getting fulfilled here, and this is 5 UTC, then we go back, this is the shift 1, shift 2, shift 3, and here our condition is also fulfilled for the prior Williams R values, and then it will look for a buy trade somewhere here provided the RSI condition is fulfilled. So we check for the RSI condition on 4 hours. So here I am just giving you an example assuming the RSI condition is fulfilled, and then we will go for a buy trade. And for that we will also need to define an the exact entry point, and of course the exit point as well in case we happen to be wrong. We will of course need to get out of the trade after defining any particular stop loss, and for that purpose we are going to rely on the ATR. So we will be using the combination of the ATR for defining the entry and the exit points, both the stop loss and the target price. And since this is a scalping kind of algorithm, I think a ratio of anywhere close to 1:1 should be good enough. We can even try with different combinations like 1:2 or anything like that. Or even for that matter, if you want, you can even utilize a combination of 1:3 or more than that. But for our purpose, for today's algorithm, we will be simply sticking with uh, 1:1 ratio, and just to compensate for the spread and commission, we will make it like 1:1.1. So we will just use the ATR on the hourly chart as a stop loss range, and 110% of the ATR as a target price range for our today's algorithm. So we get back to the Visual J Forex platform, and here what we have done so far, we have subscribed to the Euro USD. This is a standard instrument subscription. Then we have defined this position amount condition. It should be zero all position pending in the open market. So both of those will be checked, and then we got the RSI for hourly blocks. As I said, we need to look at the RSI value, and we should be scalping with the trend, and for that purpose only I have brought in this RSI of the 4 hourly charts. And then we move our attention to the Williams R, and here these are hourly values with shift 3 and shift 0. And then we got the historical candle to compare the recent price action, and then we got the ATR for determining the stop loss and the target price. So we get back to the work. We will also need to define the 110% of the ATR. So we will need to do that calculation, and then we will leave some empty space as and when if we need to do some calculation. We will have the space to do that. So we will proceed as per the need while building the buy and the sell side. So now once we are done with this calculation, we proceed for building the buy side of the algorithm, and here we need to define variable, and we will make it like TP. We keep it at 1.1, and it is double. The variables type is double, and then since we are working with the Euro USD, as I had explained in my earlier sessions as well, we need to do the type conversion. Here this result is going to be in double format if we don't do the type conversion, but we need the result in integer, so we will need to do the type conversion as well. And for that we need to cancel out the 4 decimal points of the Euro USD and just make this 0.0040, suppose if it is 40 pips, as 40, and for that we need to multiply it with 10,000, and for that we make a new variable. Let's create a variable here, and type conversion TC. Yes, we got the 4 zeros, right, and we do the type conversion, and here comes A1 into A2 into A3, and we will do the type conversion once we get the market open blocks. Now we will need to do the same thing for the stop loss as well, though stop loss is going to be the ATR only, but we need to do the type conversion there also. and for that only we are going to need to make some changes. And again we take this line 21 and multiply it by type conversion variable, and we get the result a1 into a2. So that's it for our entry and the exit points. For the entry point, we can adopt multiple approaches. We can even try to work with the pending order, or say we can even try a combination of market open after determining some precise entry point after doing necessary calculation. So it can work both ways, and it depends on what is your preference. So suppose if you want to go with the pending order, you can do that. We have done a couple of webinars for pending order development as well. And for market order, it's relatively simple. And I think in this setup, we will stick with the market open rather than going for a pending open. So let's stick with that. What we can do, we will simply take the last candle's closing value of the hourly chart, and we can deduct some pips, some buffer, like maybe 10% of the ATR or 5% of the ATR, or you can straight away you can simply keep in mind the closing value, and whenever the price starts to rise above that last hour's candle closing value, you can go in for a fresh trade. It can be done both ways, so it's not that difficult to do either ways. And for that, now for determining the exact occasion when the price starts to rise, you will need to take a historical candle. So here I will show you what can be done. Suppose let's take a look on this candle's closing value. So the close here is 1.08416. Now we can do like 10-second candle when the last candle closes above 1.0841 while the prior candle was below this level. Then the order will be executed. It will go in for a market open straight away at 1.08416 or about that. So we can do it also this way. We can even for greater stability, we can even make it 1 minute. Last time around we had done with the 10 seconds, so this time around we will do it with 1 minute. And either way it is fine, it depends on the preference and how much means volatility you are factoring in. So we go in for some info. We take these great historical candle blocks. We will need to shift 1 and shift 2, and as I said, for today's session we are going to work with the 1 minute setup. So here the default period should be 1 minute. As I said, 10 seconds can be used as well. It's up to you, whichever you are comfortable with. And here also we need to do the changes. And we have done the changes. Now bit side shape 1 and shape 2, the last candle and the candle prior to that. And now, as of now, we are looking at a situation where it's looking like that most of these defining parameters are ready for starting to build. The buy side, suppose if the need arises, we will leave out some space, one row here, and then we will start working with the buy side. And then suppose if we need to do further calculations depending on any deficiency we come across, we will go and utilize this space. So now we have to take in the multiple open. Okay, multiple action is here, and as of now we connect it, but if we need to add something more, we can do that anytime by just disconnecting the flow and then making it pass through other blocks. Now we need to take in some if blocks, and we will need to define our conditions. Broadly speaking, we first have to look at the RSI values. Now we are going to compare the RSI values of the last candle close to the RSI value a day back, and for that we take out 15 and we compare it to out 16. For a buy trade it should be greater, so we take this and it should be greater, and the further condition is that this last candle closing's RSI value should also be above 50. So here I will show you the requirement. Now we have the scale of 0 to 100 and we want the value to be above 50 for any buy trade. So we type in the value here. Okay. Now we have to look at the Williams R and historical candles of the hourly setup. We want it to be greater, so we take this first input greater than second input. Okay. Now second thing we do is we check for the Williams R values, and for that we need the Williams R of last couple of hours, and here we are going to check the 3 hours back time frame, and we bring in Williams R 18 and it should be below minus 80. The scale is inverted for the Williams R and we want it to have been in a oversold territory for at least couple of hours, and for that we are bringing in this condition. It should be below minus 80. So we write it minus 80. Okay, it should be below, so we straight away take a couple of blocks and we join the dots. Now it should be less. Again we check on the Williams R value of the last hourly candle close and it should be below minus 50, just to ensure that here we are actually looking at the current value, not shift 1. So the current hours value will be looked at and it should be below minus 50. So Here I would like to show you on the chart as well. Whenever the retracement starts, this value, it shouldn't have seen too much of an rise, and as you can see here, we will go for a buy trade as long as there is not much of an volatility and the value is still to climb above -50 levels, so it should be less. Again we take the if and we join the dots. It should be less than the second input. So far so good. Let's connect this so that we don't mess up the combination. Now we connect this if conditions, and again we will need to go back on the upper side to see what kind of further conditions we need to define. Let's join this. Okay, we got the uninterrupted flow as you can see from this coloring. Now is the time to look at the price action. We have defined the use of the RSI and the Williams R, and it's the time to see how we can utilize the historical candles closing value. Since we are looking at a buy trade, as I explained to you, suppose if we are looking at a buy trade, we need the Williams R value of candle with shift 3 to be below -80, and then the last candle close should have been greater than the opening price. It should have closed with gains, and also the candle closing should be greater than prior candle's open price, and also the prior candle should have closed in with losses. Its closing level should be less than the opening levels. So now we have to define these parameters as well. So we take the historical candle shift one's closing levels, and then we compare it to the same candle's opening levels. Auto created variable, we got the candle 19, and we have here candles closing price, and the closing price should be greater than the candle open. Now we again take some blocks and see what can be done. Here we have the closing level, and it should be greater than the open price. Then the candle 19's closing level should be greater than the candle 20's open price, as his candle is with the shift 2 value. So we want candle close to be greater than candle 20's candle open, and of course the candle should have closed in red. That will mean that candle closing was this 20 candles closing was less than the candle open. So we take this candle 20 and we take candle closing. So candle closing and the candle opening conditions have been compared here, and it should be greater, and for the candle 20 its closing level should be less than the candle's opening level. So there is this difference. Now, as I said, candle closing should be, let's take a look on the chart as well, and its closing level should be less than the opening levels. Okay. So we have kind of added the historical perspective as well to our ongoing algorithm development. So as we are progressing towards the end of this session, we have made good amount of progress. Of course, a lot needs to be done. Now we will need to take what kind of further optimization we are going to be in need of. So here is this combination. Now we again go back on the higher side, and the ATR is not of much influence. We have got the historical candle data already. So let us again go back on chart to see how to optimize the algorithm further. We have defined this condition that the last candle close should be in the green, that is its closing price should be higher than the opening price, and the immediately preceding candle it should have closed in red with the candle closing level being lower than the candle open price, and then we have done cross comparison as well. So this condition is also now fulfilled for us. Now we need the precise entry and the exit points, and for that, as I said, we can try two different setups. One is just take the closing value of the last candle, and whenever the price starts from below and rises above that closing level, we can go in for a fresh long position, and this would be valid for at least 1 hour. And whenever that happens within an hour after this candle close, it can initiate the trade. So we now look at the candle 19 closing levels, and candle 19 closing levels are, we got it. We now need to go to the 1 minute hourly candles, 1 minute candle, and again here we look at the candle closing levels, and then we need to go to We will be now comparing the 1 minute data with the hourly data, and for that we will need to use this look back period of 2 and 1. First thing first, we take a look on the candle 19 closing value, and then we need to see how the candle with the shape 2 had closed. So we take the candle 30 closing value, and it has been defined at 1 minute, and it should be less. Okay, and then comes candle 29 with shift 1, and for that now we are going to look at these closing levels. Okay, and here we are almost done. On the buy side, of course, we are still to add the market open, but as I am looking at the watch, I don't think we will be able to complete it today. So what we will do, we will simply take in market at open, and I will just connect it here to use it kind of a marker, and we need the candle closing to have been greater than candle 19's closing value, and that means we are now pretty much close to the buy side setup. But since we need to do further refinement, some calculations, and then put in those values at the buy side of the trade, we will now need to wrap up the session, and then we will start the day on a fresh slate to get maximum of the work done. So we connect this, and I think something is not working right, and for that we need to do some adjustments here. Aesthetically it should be looking good, and it wasn't. So now we have done the course correction. So this is the development so far. We are almost done with the buy side. We of course need to do some changes, some modifications in the market open order, but we will do that in tomorrow's session only. So once again, I would like to thank you all for joining in. Have an excellent day ahead. See you tomorrow. Goodbye.